Throughout this morning, we have seen quite a downturn in the markets, affecting everything from cryptocurrency to traditional assets. And it's at times like this where many individuals can often let their emotions overtake them and lead them into making decisions that they otherwise wouldn't make and that they almost always regret later on. Now, the spread of the coronavirus has people extremely fearful, and the response from the market has highlighted that. As a long-term investor, this is typically when I begin to look for opportunities, especially at these moments of maximum pain from retail traders and investors. Now, in the case of Bitcoin, I do believe that we are coming to very opportune levels to begin accumulation. It was just a few months ago that everyone said that the narrative was, if Bitcoin was only $6,000 again, I would buy so much Bitcoin. Well, now we're here. What are you going to do? Now, markets plummeted after the opening bell, going to traditionals, following news that the Trump administration is instituting a European travel ban. Now, circuit breakers on exchanges were tripped again this morning, bringing markets to a temporary halt after the SPY plunged, the S&P 500 that is, plunged by more than 7%, the Dow Jones opening down by more than 1,600 points, more than 7%, and the NASDAQ similarly fell by 7% in the early morning trading. And when trading resumed shortly after 10 a.m. Eastern time, markets continued their sell-off, and any news of stimulus measures or central bank intervention only currently seems to be heightening investor anxiety. With U.S. markets officially in bearish territory for the first time since the 2008 financial crisis, not even safe haven assets like Bitcoin or gold seem to be getting spared. Now, Bitcoin for a moment even struggled to hold 6,000 as support, dumping as low as $5,500 levels, marking the second Black Monday event for our digital asset in the same week. Now, Bitcoin has since begun recovering, reclaiming the $6,000 range during this afternoon's trading session, but still, the incident has left hodlers scarred as Bitcoin has marked its single worst performance on the hourly in Bitcoin's history. Altcoin markets saw a similar rout. Without a single token being spared, crypto bubbles is a sea of red, with many coins down as much as 40% today. But in summary, for newer traders or investors, I believe that caution is your best route. However, and I cannot stress this enough, I do believe that this is a terrible time to start looking at $3,000, $4,000 levels and thinking that you are looking at a terrific shorting opportunity. I believe that can get you in a lot of trouble. And I know for a fact that lots of people woke up this morning, looked at the charts, and felt an overwhelming desire to sell the bottom. And had they done so, or if they did so, they're probably feeling a lot of pain and probably already feeling like they should flip long and exit their short at a loss. And when they do, price will likely dip more and they'll want to short sell again. Everything that we do here at Cracking Cryptocurrency, I've designed to avoid trading like this. Systems building, stated purpose to remove subjectivity and emotional impulsivity from trading decisions. Every single person watching this channel, every single person in the group, everybody that contacts me, and many of you have made terrific strides toward achieving consistent profitability. And these black swan events are baked into the market and come with the territory. Every job, every sector, every business has moments of chaos where the traditional flow of business as usual is interrupted. And the market or trading is no different. And this is one of those events. This won't last forever. Heck, I don't even think this is going to last much longer. So keep your eyes on the horizon. Keep doing what you've always done. Keep investing as you've always done. Because if you do that, the statistics for success are on your side. I encourage you to continue trading and investing as you always normally would. Don't allow unnatural market movements to scare you or force you into making unwise decisions. You will regret them. And if you faithfully follow your methods, you will continue to be successful. Let's do it together in today's episode of Breaking Bitcoin. Welcome back to Breaking Bitcoin, recording and broadcasting live to you Thursday, March 12th, 2020 from the underground Cracking Cryptocurrency bunker. This is your daily source for everything's markets, for everything markets, and finance. We are broadcasting live to YouTube, Twitch, D Live, Facebook Live, and television if you have the Investor News Channel app. And if you're watching on YouTube, make sure to subscribe, turn on all notifications, hit the thumbs up button, and leave a comment down below letting us know what you've learned today. Also, make sure to follow us on Instagram and Twitter for exclusive content that we do publish there every single day. If you have any questions, drop them in the live chat. The moderators will direct my attention to them. So we've got a lot to talk about today. In today's episode, we're of course going to be breaking down all of the markets, cryptocurrency, traditional CFDs, exchange traded funds, looking for opportunities. We're going to be talking about safe haven assets that you might be missing out on. And it's not Bitcoin or gold, shocker. We're going to be talking about the flash crash of Link today, trading down to 1 penny on the Binance markets. Whew, man. Woo. Anyways, and we're going to be covering a few other things as well. So if you guys have any chart requests or questions, please submit them in the chat. Of course, we're here every single day from 12 to 1, often longer, Central Standard Time. So let's not waste any time. Let's get right into the markets this morning. Hopefully you guys are doing fantastic. All right, here we are in the live scene. And yes, it is a bloodbath out there. That is not to be understated. But let's, as we... People are saying, no, Link, don't even talk about Link. Link not found. All right, so let's obviously just take an overview of the cryptocurrency markets right now. Look at the majors. We have Bitcoin currently trading at $6,200, Ethereum down below 150 at 144, XRP under 20 cents, just a little under 17 cents, EOS down at $2.25, Litecoin, we talked about it being under $50 yesterday, it's under $40 today, trading at $35, trying to reclaim 36 as we speak. BNB, we had talked about $20, we are down below 13 at 12.30. Cardano, which hit my final take profit on today's sell-off to the downsides, currently trading at 490. So quite a comeback on the Cardano BTC pair, USD pair, not holding so well. And Origin Protocol, I don't even know why that's still up there. I'm not even in that trade anymore. Looking at traditional markets, we've got the SPY. Listen, now traditional markets are bouncing back a little bit. Now we have basically seen this for the entire last week. We gapped down and then we closed the day positive and we gapped down again and we closed the day positive. So this is the third time we've already seen this week. So let's be a little cautious before we start rising and riding to the markets here. But the SPY currently trading at 263. We've got the Qs down at 187. We've got the Dow, the iShares Trust, the IYY down at 123. We've got the healthcare sector up at 88.41. Gold spot down at 1605. We talked about this yesterday. We talked about gold being a no trade. I believe we talked about it being a short. We'll look at the charts. Silver down below $17 at 16.18. We called the short on silver earlier in the week. Bentley crude continuing its sell-off, but as I said, I'm out of oil. So again, one of the biggest trades that I made this year was in traditional markets, and that was longing the DRIP ETF. That is an inverse 3x leveraged ETF that tracks oil. So if you want to speculate, basically short sell futures, essentially, that is the way to do it for an American who doesn't have access to CFDs. So that was how I did that. Again, as I said, there's nothing to do here with oil, but Bentley crude, oil down at 33.87, and the DRIP ETF at 625, having a little bit of a pullback, moving a little bit inversely. Crypto bubbles, of course, a massive sea of red. Quite a rare occasion where we have pretty much equally sized bubbles, yet we're in double-digit territories, right? So pretty much equal bloodbath. Doesn't matter where you put your money. Doesn't really matter where you put your money, unless you had invested in a hand sanitizer startup, an N95 mask startup, or potentially sterile latex gloves. Would have been pretty good investments, safe haven assets that potentially we're sleeping on. But jokes aside, let's go to the charts and let's break down where we are. Now, where did Bitcoin end up landing? In the monthly level of demand that I talked about. It's almost like technical analysis works from time to time. So anyways, as I said, a little bit below 6,200 now, 61.68. So let's go to the monthly here. Let's break some levels down. As we can see here on the monthly, we have driven right down to the bottom of that monthly demand level. This is the shelf that was formed back in 2018. This was the level of support from 2018. And when we finally broke the shelf, so I want to kind of draw your guys' attention to this. I want to draw your attention to this. So back coming off the highs of December 2017, we had a monster sell-off, right? We went from 19,000 to 6,000 like this. But actually it took 2 months, but I digress. But what did we happen? What happened after? Excuse me. What happened after we touched 6,000 for the first time, coming down off of those highs? Well, we had a monster rebound. Then we had a month sell-off. Then we had a month upside, 2 months of downside, consolidation. And we consolidated around this level for a very long time because in my opinion, as I've said before, 6,000 to 9,000 represents the fair market price of Bitcoin, right? So in my opinion, as we get below 6,000, anywhere between, and these are wide ranges, but just keep this in mind, anywhere below 6,000 to 4,000, in my opinion, Bitcoin is oversold. So again, in my eyes and in my opinion, for those who are sitting on the sidelines and looking to establish a reasonable portfolio allocation to Bitcoin, I do believe that we're coming up on opportune moments for accumulation. 6,000 to 4,000. I think that people looking down at ones, twos, threes, 500s, I think these people are just afraid. I think they don't understand market cycles. And I do not think that that is going to happen whatsoever with Bitcoin's price. Listen, the market will do what it wants to do. And ultimately, at the end of the day, as a trend following trader, it's going to be current price that drives my decision making. But also, we also have to apply our own discretion and our knowledge, at least my experience and wisdom in markets in general. And as we get below 6,000, in down to potentially 4,000, but I don't think we're actually going to go down that far. I think that overall people are overstating the effects that we will have. One thing that I want to say real quick is that the biggest narrative driving fear has been the interruption of supply chains. Nobody's talking about the mortality rate. Nobody's talking about, really the impact of deaths that will be caused, the mortality rate. But the main narrative that people point to is going to be supply chain interruption. And I happen to know for a fact, as we've reported on previously during this week, that China's industry is coming back online. So again, I have friends that run small businesses. I have friends that run manufacturing companies who source their products and supply chain from China, and they already have their scheduled shipments back on track. Now they're delayed by 3 to 4 weeks, in some cases several months, but they are scheduled and Chinese businesses are ramping back up. So the supply chain is coming back online. And I think that over the course of the next few months, the rest of the market will begin to realize that. And savvy investors realize that right now. They realize that the impact of the coronavirus is not going to be this absolute mayhem and apocalypse that everybody thinks it is going to be. Markets are responding currently as if they are. But let me just quote something for you real quick and let me explain something to you. What is a market trend? A market trend is the dissemination of that which is known by a few to being known by many. Right? So inside information is known to a few and they accumulate or distribute at opportune moments of the market. And as that knowledge becomes available to the rest of the market piles into that trend. However, in this case, the knowledge that is being disseminated that this is a global apocalypse, that certainly it is a pandemic. That is a technical term. This is a global illness. But the impact, I think, for human lives, for economics, for supply chains is grossly overstated. Grossly overstated. Again, I think that in a year, this will be remembered as H1N1. Again, you're talking to somebody, and this is coming from somebody who has stocked up, who is a bit of a prepper, who has taken precautions, who recommended that people take precautions months ago, last month, last week, weeks ago. You want to get your supplies before it is difficult to do so because there will be supply chain interruptions for several months, as I talked about. However, the industries are coming back online and the supply chains are going to be restored. So that knowledge is already being known to savvy investors. And over the next few months, 3 to 6 months, 1 to 2 months, not sure on the time frame, that knowledge will become known to the rest of the market and they will step back in and buy back up the investments that they sold at a massive loss. So in before knowledge dissemination. With that being said, so we drove down on today's current daily candle, really over the course of about 30 minutes. Again, worst hourly performance from Bitcoin in the history of Bitcoin's asset history price history. And again, driving down into monthly demand. Now let's look at these levels that we've been talking about for a while. They're not just things to talk about. They are levels to watch and potentially take action from. So we're going to bring up the CC EMA script. We're going to reset settings because I was looking at something. The monthly exponential 55 moving average. We've talked about this before. This is where Bitcoin stopped, consolidated. Now, we did drive a little bit lower than this. When we plummeted from the $6,000 region. I think that is unlikely. If I were looking for lower downside wicks, again, I've talked about this being my lower downside target. 53.32 is where that's currently coming in on the Bitstamp chart. So again, those who want to kind of dollar cost average in between here and there, I think that is a good approach. Going to the weekly time frame, we have the exact same thing, tagging the weekly 200 simple moving average. Again, similarly, where did price end up stopping and accumulating in the sell-off from 6,000 back in 2018? Right at this level. Now, again, we did drive a little bit lower and accumulated below this level before finally breaking out above it. So just to get some metrics for you. Now, these metrics are about 22% more to the downside. And from here, from current price to that 53 is only about 13%. So again, we can see that we drove down a little bit on the monthlies. So if we are kind of looking for, in my opinion, what's our really kind of max downside potential over here, right? 15 to 20%. Now, do I think that's going to happen immediately? No, I think we're going to see some consolidation here. But can we see drives down lower? Absolutely. You know, I'm not calling an absolute market bottom. I'm saying that if you're sitting on the sidelines and you've been wanting to allocate risk to Bitcoin, I think that you are looking at a great opportunity. I think that you're looking at a good opportunity and a good range to begin reasonably and conservatively accumulating in. For those like myself who already accumulated Bitcoin, you're beginning to look at a situation where you can begin reasonably and conservatively establishing a low leveraged position, right? To the upside, to take price to the upside. Again, this is how most of the largest traders will do these things. But for those who are just becoming used to their trading strategy, for those who are just becoming investors, for those who are just getting into the markets, the best thing for you guys to do is to practice your strategies, wait for trending signals, do what you've always done, and just continue doing that regardless of what the market is doing and regardless of what anybody says and regardless of what you hear in the news and regardless of what even people like myself say. Practice your strategy, and work to maximize the returns from that. Andrew Munn says, my trade went up $6,000, then down to 2,800 in 20 minutes. Oh, man. All right. So as we talked about this, called this last week. Let's pull up the breaking Bitcoin indicator here on the weekly. We did close below the baseline nominal over here on the 2 weeks ago on the close of the 24th. And then we confirmed this with the open of the 24th, the close of the week of the 24th. And then the second weekly candle, so the previous weekly close, we closed below the baseline and the breaking Bitcoin initiator, validating weekly hedge short positions. Okay. Now, so again, safest track, there are kind of different levels to this track. For those who are just becoming traders or investors, you don't want to be sitting in Bitcoin. I've kind of reviewed that and thought about that a lot. What I do is fairly aggressive, sitting in Bitcoin and utilizing future short sells. And I've produced hours of content to cover this strategy, but people still struggle with it in the beginning. So I think that generally the safest place for people to sit as they are becoming traders in the cryptocurrency markets is to sit in USD or to sit in US dollar tether, hold your currency in something stable, and you can see the actual nominal results of your trading strategy. And then as you become comfortable and confident in that, you can begin allocating risk onto Bitcoin and begin utilizing a hedging strategy. That does take time to become comfortable with. It took me several years to develop that strategy myself. So do not feel bad if you are struggling with that. So let's go to the daily, which is actually the time frame that we trade. So just sticking to PTP methodology and basics here, got a short signal, the continuation short signal over here on the 8th of March. We did get a bottom feeder signal here, and we're currently getting one again, a bottom feeder signal that I will adhere to because I developed that strategy for a reason. As I said, I will buy when others are fearful. So Anyways, that bottom feeder trade of mine has been stopped out, was stopped out at 7,200. So I was able to clearly with a stop loss mitigate quite a lot of loss that other individuals who were just holding or not practicing risk management with a proper stop loss would adhere to. My Cardano H20 short did hit all of its take profits. I was also correct on the pound dollar, dropping the pound Aussie trade. So anyways, we are having this big plunge down into our monthly levels of demand, weekly 200 simple moving average, monthly 55 exponential moving average. Looking at long term, looking at the macro on the monthly and then the weekly, can we see another 15, maybe max 20% more downside from current price? Yes. From the lows of today's candle, potentially, I would say maybe 10%. So yes, we can absolutely go down a little bit further and consolidate at those levels. But again, that in my opinion is accumulation zone, is where one would begin reasonably putting on a leverage position. Now, again, there's also another way to think about this, of course, which is waiting, being a little patient and seeing confirmed consolidation and then waiting to take that breakout to the upside. That's absolutely fine. Again, there's no shame. And let's go back and look at weekly accumulation. There's no shame in buying on this candle and waiting for that absolute breakout. Similarly, over here, we have weekly consolidation. There's no shame in waiting and buying on this candle and waiting for weekly expansion, for the weekly markup phase. There's nothing wrong with that Wyckoff methodology. All right. So where we currently sit right now is on the daily PTP strategy, a no trade zone. We have an overbought minx. We have parallax in oversold territory. Wadatar explosion is giving a massive candle, which to me would indicate, wow, that's a huge movement to the downside. This is definitely an opportunity to take profit on any short positions that one may have had in. Now, going to bottom feeder. Going to bottom feeder. As I said, bottom feeder did give us two signals here on this daily close and on this daily close. Those were stopped out at 7,200. Very good risk management coming in from bottom feeder right there. And yes, we do have to scroll down a little bit, but we are getting another signal today. So I'll be posting that and the metrics of that trade later on in the channel. Josh Teeter, thank you so much for the subscription over there on YouTube, my friend. So that is my overall prognostication on Bitcoin. Again, I'm going to go ahead and follow my systems here that I have developed. I'm going to use my nuance and discretion. And that's how I'll be proceeding with Bitcoin for the foreseeable future for the next 2 to 3 months, as I expect we kind of move into consolidation after this movement to the downside. All right. Other interesting things that I want to point out here. I love Confluence. I always like Confluence. And a really cool indicator is from Capriel Charles. He does make really good indicators. You guys have probably seen this before, but this is the Bitcoin. Make sure we're in logarithmic mode and put this on auto. And we'll also go ahead and hide drawings for a second. This is the Bitcoin power law corridor, right? And as you can see, it has been pretty spot on for all of Bitcoin's history. And this tracks the parabolic or logarithmic growth rate of Bitcoin, tracking the highs and tracking the lows. And as you can see from its inception, it has been quite accurate. And where are we at right now? We are at the bottom of the power law corridor, just as we were here, just as we were here. And as you can see, very similar to the weekly 200 simple moving average and the monthly 55 exponential moving average, there is no such thing as a line in the sand. This is an actual horizontal level that must hold. No. All of these things indicate ranges where there are opportunities that you will require a strategy to take advantage of. We are in such a range right now. I think this range will likely last for the next 2 to 3 months. As I said, I believe we're going to go into reaccumulation at this point in time. I don't think that we're going to significantly or for extended periods of time trade significantly lower than this. It can happen. As you can see, when we did bottom out, this is 2015. We did consolidate here for quite a while, but you can see overall the trend is to the upside here. Similarly over here when Bitcoin had its lows in 2012. And you can see that it has called the tops remarkably well, calling the first top up here at about $1,000, the second top at $20,000, and currently predicting a next top of $56,593. And just on the aside, do you guys really feel that within the next 2 years, Bitcoin will not be back above $10,000? Do you really see Bitcoin in 2 years below $6,000? Just ask yourselves that. And as I talked about yesterday, so this morning I published 3 premium webinars for our premium members. The first one is going to be a Bybit tutorial on how to set multiple take profits, conditional orders, the difference between index, mark, and last price, why I set orders the way that I do, as well as how to set orders to have maximum flexibility for what you guys want to do, how to set trailing stops, things of that nature. Really good premium webinar. The second one is Forex 101, how to set up a demo account on a Wanda, how to fund it, how to set trades in a Wanda, how to position size with the position size calculator for Forex trades, and a brief introduction of currency valuation and currency differences. And then the third one, and probably the best one, is in the investment psychology module that I just published this morning, which is Introduction to Investment Psychology. Only buy in what you know and believe in, right? So mental strategies for success. And honestly, I really encourage every premium member who's watching this to take some time over this week and this weekend to listen and watch that webinar. I took a deep dive into the things that I look at when I'm evaluating what to invest in, how I have utilized these strategies through my experience in the markets to achieve success, and the most important things that I think people often overlook when it comes to investing or holding anything long-term or doing your due diligence or doing fundamental analysis, the things that I think are absolutely important. So, things to consider, right? And again, right here, if you do not believe in the use case or the importance of Bitcoin to improve your personal life, then you don't really have a good reason to be investing in Bitcoin, right? When you invest to make money as your stated goal and you buy things that you don't understand, you do not typically have success. You will typically lose, right? Just as when you trade, obviously we trade and invest to make profit, of course. But if that is your focus in your head, you will often underperform the market and you will typically not achieve the results that you want. When you trade to trade well and follow your system, profits come naturally as a result of following your own rules and following your back-tested, tried and true strategy that you have tested backwards and forwards to know works, right? All you have to do is follow it and apply the same discipline, risk management, and emotional psychology that you would in any other situation. And investments are no different. Long-term holds are no different. Buying things that you don't understand because somebody has told you or you have come to believe that it's going to appreciate in value is not any reasonable or logical way to invest, because unfortunately, that is the way that our traditional financial markets work anyways, and everybody understands that they are a mess, right? Money is pumped into whatever produces yield, and we understand that this is an inefficient and ineffective method to exist as a society and how we manage our finances, and it should be no different from you. If you are buying things that you don't understand so that they can go up in price and make you money, and then you turn around and in the same sentence criticize the Fed, criticize hedge funds, criticize big banks on Wall Street for doing the exact same thing and how their corruption is ruining the economy, you are essentially saying that you are doing the exact same thing that they are, and you are criticizing them for having the same mentality that you do. So invest in what you understand, invest in what you know, and invest in what you believe in, because that is the way to build a better sustainable economy, the way to build a better sustainable society, and a better way for you to actually realize your goals of profiting. If you understand cars, then you should invest in an auto shop down the street more than you should invest in stocks. If you understand restaurants, then you should invest in restaurants more than you should invest in something that you do not understand. Because when you invest in things that you don't understand, the drawdown is painful. Whereas if you invest in things that you understand, when you have drawdown, you understand that this is just part of your investment. All right, so lower edge of the power law corridor. Very interesting, very interesting. And again, I've talked to many individuals who saw the same opportunity back in December and January of 2018, 2019, and did not buy and have regretted it ever since. And now Bitcoin has been nice enough to give us the same opportunity twice within 2 years. Now, let's go down and look at the lower time frames on Bitcoin here. All right. 12-hour signal from Wadatar explosion here. Let's make sure we get the baseline on here. No trade signal, no confirmation. We come back, we get a continuation bounce, reinitiation signal all through here, continuation short on the 12-hour candle, far overextended. This is a no trade candle, especially with minks in oversold territory. Excuse me. All right. So nothing to do here on the 12 hours. You can see we made a low. We did wick right below that low on the current 12-hour candle, and we are currently trading higher than that right now. 4-hour time frame. Again, slight movement to the upside here as minks moves to give us a take profit short signal, which we'll be confirming on the current 4-hour candle or on the next 4-hour candle. So I do expect the 4-hour to be telling us to to not be trading or to be taking profit on our shorts, which, by the way, the 4-hour system signaled for right here. I have to point this out. We close, let's just break this down. This is very easy to see. Here is the breaking Bitcoin initiator. We flip red here. We are below the baseline. Wadatar explosion gives the signal with a rising explosion level. We have a continuation short signal from minks, and Parallax is bearish, giving that confirmation. Again, beautiful trade, hitting all take profits, and we'll be getting a take profit short signal on the, depending on when minks crosses here, on the current candle or on the next 4-hour candle. And looking down at volatility right here, looking down at the lower time frames, we can see consolidation. This is, of course, what we did see protracted over here with rises and valleys, looking like we do want to attempt to break these highs that we formed at 61.48. Watching this kind of closely, and again, 15-minute chart flipping bullish over here over the last several hours. So again, after reaching these lows, we rebounded, got the take profit short signal here, did get a continuation short signal, but now we have flipped long to the upside. Parallax on the 15-minute, flipping long since the first time. Parallax, even on lower time frames, is something to watch, guys, because it is the best confirmer out there that you can put on your chart, in my opinion. We can see that Parallax flips bearish here on this candle, calls all of this, and it turned bullish for a brief second here, a little bit of consolidation, and it's just now turned bullish again. We also are starting to get rising volatility from Wadatar explosion down here on the 15. On the 30, we're not quite there yet. With Parallax or with Wadatar explosion, minks is pulling to the upside, getting the take profit short signal on minks. Continuation short signal as well. 30-minute signal here, catching this last dump movement to the downside in the take profit short signal right here. So whichever time frames that you're utilizing these on, the premium indicators are catching fantastic movements. And again, yes, lest I repeat myself, there is a bottom feeder signal on today's daily close. Ethereum similarly as well. I don't have any power law corridors or anything interesting like that. If we go to Ethereum, let's actually do Ethereum USD on BitMEX so we can actually get a little bit more historical data. And it's roughly the same. Oh, we get more on Coinbase. Okay. Below all major moving averages for Ethereum on the monthly, we just do not have as much data. Below everything on the weekly as well, we don't have enough. We do not have 200 weeks of Ethereum data over here to the dollar on Coinbase. And I won't be looking at the BTC pair because I do feel that information is misleading. Currently still a higher low on the weekly. We have not finished, of course, or closed the weekly out, so we will be cautious. And of course, the 1355 cross under has not crossed back up to the upside. We get the 1355 weekly moving average cross under over here. And even with this rise back up to the upside, we never confirm that upside movement. On the daily time frame. On the daily time frame. Mink short signal right here, Parallax confirmation, Wadatar confirmation, continuation signal, rising through to right now. No exit signal yet on the daily, but again, large candle like this, in my opinion, definitely a great opportunity to take profit on Ethereum. Looking down at the 12-hour, I don't see any action to take. Looking at the 4-hour, again, 4-hour system catching this as well. Let's see here, giving you the continuation short signal back here with Parallax confirmation. We get a powerful signal from Wadatar explosion. So for those using Wadatar as their initiator, catching this movement. Let's take a look down at the 30-minute time frame. 30-minute time frame has, since the first time over here, since the 11th, So several, yesterday, but we can see that we're consolidating on the 11th. We break bearish and we have just risen above and broken the 30-minute initiator. MINX signaling long on the 30-minute time frame as well, since going bearish over here. Parallax not quite there yet on the 15-minute chart, already flipping a little bit to the bullish side as well. Giving a continuation long signal just a few minutes ago with parallax confirmation, Wada target confirmation, MINX confirmation, MINX long signal. All of the bits and bobs are there on the lower time frames for Ethereum. We will pause there for a moment. Normally we take a deep dive into XRP and EOS, but you guys know the drill. The USD markets are highly correlated at this point in time, so I do not see those moving independently or differently from each other. If you guys would like an in-depth analysis of either of those pairs, please let me know in the please let me know in the live chat, and I will get to those as quickly as I can. All right, taking a look at traditional markets here. As I said, as kind of comfortable as I feel with Bitcoin, knowing its movements, I do not feel the same sort of buying the bottom feeling here on traditional markets. So let's just break this down. Daily breaking Bitcoin system. We did get the continuation short over here on the 6th of March. We did get the take profit short signal on this previous candle, not letting us grab this gap to the downside, but that's fine. No action to take here on the SPY for the daily. 281.17 is where we need to close the daily above to put us in a no trade zone or to invalidate short trades at this point in time. And we do need to get all the way above 306.50 to regain the bullish trend. Until then, there's really nothing to do on the SPY as of today's daily close. Looking down at the 4-hour time frame. 4-hour time frame getting a little chopped up, getting a continuation short signal on the previous 4-hour close, which did close positive and giving us a little bit of follow through right now. So again, that 4-hour close from candle open would have you up about 1.35% currently so far, or about 328 points. Going down to the 15-minute here on the SPY. This has been fairly clear. Continuation short signal breaking off on this gap. You would have been able to grab some profit on this wick or this continued movement to the downside. Exit signal long right here, but no confirmation from anything, and getting sold back off into 15-minute close below. What is that? 252.99. No, I'm sorry. 252.24 would be signaling for a continuation short again. Looking at our Qs here on today. Similar continuation short signal here and a take profit short signal here. So grabbing some take profit down here, out here, and missing out on this movement so far on the daily. Really nothing to do here. Let's move and look down at the 4-hour on the Qs here. Continuation short signal similarly on the previous 4-hour close, getting some follow through right now. MINX confirmation, Wada target confirmation, parallax confirmation. Going down to the lower time frames. Similarly, continuation short signal, probably grabbing profit on this wick or this down movement right here. Unlikely getting stopped out on this movement to the upside. Currently has flipped the trend into a no trade zone. We just closed below the continuation filter. Getting a sell off right now as we see on the Qs and the SPY. And the Dow, a close below 180.73 on the 15-minute would be signaling a continuation short. Looking at the Dow ETF today, the iShares Trust Dow Jones US ETF. Similarly, continuation short signal here, taking advantage of this gap, and a take profit short signal here. So the Dow gave us the most attractive trade on daily time frames for continuation filters. Gap to the downside, nothing to do right now on the daily. We are in a no trade daily zone. 4-hour time frame, signaling for a continuation short on the current 4-hour close. And going down to the 15-minute here. Let's see here. We did get a continuation short on this current 15-minute candle, and we are in that trade right now. 125.67. 15-minute close above that would invalidate the position. Now let's talk about gold, as much as this is going to break the gold bugs' hearts. All right, so gold closed below the baseline yesterday, putting us in a no trade zone, or to actually not be in gold, right? That is an exit signal for any sort of long gold. We called multiple good gold long trades, mentioned not to trade this or this. We did get the long signal from gold here. We're able to take profit on this candle. Now on today's daily candle. This is a no trade candle for me. We are way too far away from the baseline to be looking to reasonably take a gold short position. So what is the best option here? The best option here is to wait for a retracement for us to come back up above 1613 and look to potentially establish short positions there, or look for a reversal baseline bounce. But gold is bearish, retesting lows that we formed over here back in February, early February. So we do need to close above 1646 to regain the bullish bias, the bullish trend on gold spot. We actually need to close currently the daily above 1667 for my system to be signaling for long trades. So currently in a no trade position on gold, but definitely not in a gold trade. Silver as well signaled for a short that has had good follow through. Silver signaled for a short here. Here was the first initial short signal on gold, catching all of this profit. Take profit short signal from Minx here, from breaking Bitcoin here, and we got the continuation signal, short signal on the 10th. We talked about this earlier, just a few days ago, on Tuesday, and then we closed below the continuation filter yesterday, giving another signal to short silver and waking up to a beautiful movement here on silver as well, hitting multiple take profits. And this is going to depend on your profit taking strategy, whether it's 1, 2, 3, all in, all out, or 50-50. All right, let me check the audio here, guys. That is odd. Let me sort out the audio and we'll be right back, guys. Testing audio, testing audio. All right, guys, we're going to test the audio out here. Just waiting for YouTube to catch up. Suppose I could just check on DLive. It's going to be a lot faster. Okay, yep. So the audio does seem okay. Can you guys confirm that the audio is fine, please, for me? All right. Microphone check 1, 2. Is this thing on? Check Czechoslovakia. So, as we were, guys, back in the game. Back in the game. Ready to win. All right, so we talked about silver there. Apologies for the audio inconsistency there. So we simply talked about silver signaling for a continuation short both 2 days ago with the Minx Parallax Wada-Atar system and yesterday with the breaking Bitcoin system. I was saying people were jumping off buildings. It's like Orson Welles all over again out there, man. All right, taking a look at Bentley Crude. Excuse me. Again, oil giving the continuation short signal here. And as I said, I got out of the market on this dump to the downside. Something I similarly recommend for anybody that was prescient enough to short Bitcoin last night. And getting the exit signal on today's, well, actually, we'll probably be getting the exit signal here in a few days as we cross back above the oversold threshold here on oil. But again, no action to take on oil. Of course, one could have taken 50% of their profits and let their position continue to ride, looking for that real big pack-a-punch. But no action to take either on the CFD or on the inverse ETFs for oil, in my opinion. All right, so let me know if you guys have any chart requests. Let me know what your guys' opinions or thoughts are on the current price movement. We're going to cover all of that. I think it's a great opportunity to check in with junior analyst Jason at Midwest Attempts to see what his outlook on this is. So let's check what the weather looks like in Bitcoin City with a nascent edition of the Bitcoin Weather Report brought to you by Kraken Cryptocurrency.
Dump it. Dump it all. Just get rid of it. It's going to zero. Back to you. Back to you.
Stay strong, brother. Stay strong. Now, we've got a lot of news to cover today, so let's get right into today's Crypto Currently segment. Let's go. All right, now, to those people who see Bitcoin as a risk-on asset, this week's drop to the mid-7,000 levels wasn't too surprising, given what was going on in traditional markets, with the Dow, the SPY, and the NASDAQ all down over concerns of a recession triggered by the coronavirus. However, what happened next seemingly shocked everyone, particularly those still committed to the safe haven narrative, as Bitcoin tanked another 24% to sub 6,000 levels, prices not seen since last May of 2019. So what happened yesterday that dramatically increased the level of panic around the world? Well, let's break down a few things. First off, yesterday officially announced the World Health Organization finally decided to declare COVID-19 a pandemic, officially acknowledging the global severity of the outbreak. 2. All three major U.S. equity indices officially entered bear market territory for the first time in more than a decade, with the Dow, S&P 500, and NASDAQ all ending Wednesday's trading session down 5%. 3. President Trump addressed the nation from the White House Oval Office, in which he discussed the sweeping illness and the measures that the U.S. government will be taking to intervene in the crisis, including a European travel ban. And 4, for the normies of Main Street, the severity of the outbreak really began to hit home on news of the famous American actor Tom Hanks announcing via Twitter that he and his wife have now been tested positive for the illness. On top of that, the NBA announced one of its players had tested positive for the illness, and the organization is officially suspending gameplay until further notice. On top of this, we're seeing increasing amounts of videos of fights from Costco, Walmart's, well, not really Walmart's, that's more of our Midwest thing. We got that on lockdown. Still safe to go to Walmart. But Costco's on the coasts, particularly the coasts, people are definitely in a buying panic as they try to stock up. Extreme price gouging on Amazon. And just now, people, regular Main Street people, not the preppers like myself, but regular Main Street people are starting to go out and stock up, and everybody's doing it all at once. And of course, it's very difficult to do so. I just spoke to a friend this morning who went to Costco to stock up on, regular supplies, groceries, toilet paper, paper towels, and there was a line around the corner of the building, and they got there at basically at early in the morning. Now, there's been a lot of debate in recent weeks concerning Bitcoin's status as a safe haven asset, with the narrative being put to a major test during this current, seemingly black swan event sweeping the global markets. Now, macroeconomist and analyst Alex Kruger has made some solid observations in a series of tweets. Let me see if I can't pull those up here. Saying, good to be mindful of global markets' risk appetite. Even if crypto is a mostly uncorrelated asset class, markets are falling apart. It looks overdone, but headline risk isn't over. Finance people are feeling cautious, and with no need to rush, this seems to have crept into crypto. He says, I'm not trading Bitcoin positionally any longer. It's feasible that this week changes everything. Investors are now looking to de-risk. Hard to imagine the halving narrative attracting much new money as things currently stand. Miners have been hoarding inventory, borrowing dollars against Bitcoin collateral. Many are overexposed. The halving will slash their profitability. It could get nasty if price is not high enough. Crypto investors should thank crypto that it's not fully connected to financial markets. Otherwise, it would have been decimated, but panic creeps around. Bitcoin at 6,400 should not surprise anyone. These are uncharted waters. When moves of this magnitude occur, anything is possible. A few whales panic, or could be forced to sell assets to cover losses somewhere else, or could decide to liquidate positions to take advantage of bargains in other asset classes. So when this kind of event takes place, be careful with taking on too much risk. And Alex Kruger stepping in here, time to pay attention. Bitcoin is trading like a risk-on asset, not a safe haven, but the exact opposite, following stocks down. Although ironically, stocks are the ones trading like low-quality shitcoins. So what's next to look forward to in crypto land? Well, BitMEX co-founder and CEO Arthur Hayes has published his thoughts in the latest issue of the BitMEX Crypto Trader Digest, explaining where he thinks price will go in the next several months as well. Now, some excerpts from this include: 1, fear and uncertainty facing humanity is enough to inspire a global margin call, and that this could push the price of Bitcoin even lower than it is today. And while he doesn't believe that we will revisit 3,000, max pain probably resides somewhere between $6,000 to $7,000 per Bitcoin. Any crypto hedge fund that allows quarterly or less liquidity will be getting distress calls. They will be dumping coins into a falling market that will push the price lower on the margin. And that once central banks have cut rates to zero and started open-ended quantitative easing, expect Bitcoin to enjoy a nice run back through 10,000 toward 20,000 by year end. And the time to back up the truck is when the futures basis goes flat or negative. That will signal an evaporation of optimism. Then you must surf the tidal wave of free money and begin buying crypto with both hands. Then about an hour ago, CZ, the Binance of CEO and co-founder, wrote in a series of tweets saying that with hindsight, store of value comes in different contexts. Today, with less than 0.1 or 10 basis points of the population holding or accepting Bitcoin, it's not liquid in pandemic situations. Neither is gold, of course, because gold is hard to travel, it's hard to carry, and that fiat is still the payment currency. Other contexts differ, such as war, stock market crashes, inflation, expensive banking fees. And I talked about this weeks ago in the context of gold and silver. Gold and silver are hedges against inflationary events such as war. They are not hedges against deflationary events such as pandemics. Now, just because Bitcoin is not behaving like a good store of value within the particular context of a biological contagion and pandemic, it does not mean that it will not act as a safe haven asset in other situations, such as during times of high inflation, which may be imminent. So, potentially, the crucial things to point out here that agree with my perspective is that it is not necessarily the fact that price is so oversold or just because it's in a critical level, technically. What really stands to point is that, yes, it is following traditional markets as a risk-on asset, not as a safe haven. But the fallout from this crisis to fiat money is what is going to be what propels Bitcoin up, which is going to be the major narrative driving its acceleration back up to previous levels of appreciation. And I think that that point is understated, and I don't hear anybody else making that point. And I want to be the one who makes that point and stands by that point quite firmly as a long-term investor in Bitcoin. Now, let's talk about safe haven assets that you might be sleeping on. Now, Joe Saz is a crypto market analyst, and he's pointing out that there's currently better safe haven assets that everyone is sleeping on. Yes, even better than Bitcoin or gold. Now, you see, in a scenario where people are panicking about their very survival and every roll of toilet paper and every bottle of hand sanitizer matters, Saz says true safe haven assets become the bare necessities that can ensure people stay alive and keep well, saying, quote, consumers are pulling money out of stocks and such to buy things that they think are more essential needs right now. I think that's what consumers are doing right now, doomsday prepping essentially. That's caused an impact on our overall view of what is a safe haven asset and what isn't. Is a stock really a safe haven asset if the world is in a global epidemic and supply chains are shut down? Or is food a safe haven asset? He would argue, obviously, that food is your better bet, and I think a lot of other people are thinking that too. So he has a feeling that that is where money is being transferred to. How crazy is that? Money is being transferred out of the markets and into the pockets of providers of goods and services, because I believe that's what money was created for in the first place. Now, Saz, his explanation behind Bitcoin's sharp price reversal is people are currently reprioritizing their essentials, and right now cash and goods, consumable goods, are king. Now, in the long run and outside of this rare and unusual circumstance, like the global events surrounding the outbreak, Saz says that he does believe that Bitcoin will prove its worth as a viable safe haven asset, a sentiment that I agree with, saying that as far as Bitcoin is concerned, it is a safe haven asset. It's just a matter of whether or not people are ready for it. Now, in the meantime, the safe haven and store of value narrative continues to be challenged as the leading cryptocurrency seems to be dropping in tandem with the stock market in recent days. So what do you guys think? Now, does the Wu flu have you consider trading your XRP bags in for a supply of emergency food? Will you be dumping your bags of Dogecoin for bags of dog food? Please let me know in the comment section down below what you guys think about today's cryptocurrency segment and what you've learned and your thoughts, because we're here to grow together. With that being said, let's get back into the live scene, take your questions before we retreat back into the underground bunker to enjoy a delicious dinner of Bush's baked beans and pork. Not a sponsor, but could be. Oh, by the way, before we get into the question and answer segment, let's boot up this chest. And let's do a big one today. Showing some massive love for the audience here. And we will distribute these rewards. Of course, if you guys watch us on DLive, you guys can take place in the giveaway that we do every single day. All right, so our first question is, can I please explain why on BitMEX, all three futures markets are at very similar prices? Usually they have a few $100s difference, thank you. Sure. Now, there are going to be a couple reasons for that. So let's talk firstly about, let's actually go to the big screen if you guys don't mind. Okay, so the first question of the day is going to be why the prices on BitMEX for the three different markets, and I assume this question is going to be, why is the price for the XBT USD perpetual contract very similar to the price on the futures expiration contracts, such as the H20, the March contract, and I believe the June contract. So let's talk about what these markets are designed to do in the first place. So these markets are generally designed to do a couple of things. One, the futures markets on BitMEX are going to be mostly utilized for hedging, for long-term hedging. If you really feel confident, say you're trading on the weekly or the monthly or the daily or multiple daily timeframes, that you feel that from now until the end of the contract, the price is more than likely to go down. So you're holding spot Bitcoin by having it on BitMEX because you cannot deposit USD or USDT to BitMEX. You have to hold your equity in BTC. So often these markets will be utilized to set up a short futures contract on one market and still allow you to trade long, short, left and right on XBT USD, the perps, the perpetual swap contracts. So it allows you the freedom, the flexibility to be hedged, while opening up the platform for you to trade up and down. Now, while you can, of course, hedge and trade on the same contract, for example, let's say that you are hedged short on the perpetual XBT USD contract on BitMEX, all you have to do is take off some of that hedge, and now you are in a long trade, essentially, right? Because there is a portion of your Bitcoin that is now not hedged and is exposed to risk to the upside. So your entire net asset value will increase if you unhedge a portion, nominally will increase if you unhedge a portion of your account, price moves up. And then once you've gotten to your profit targets on that long trade, you rehedge everything, including the profits. And your net asset value has gone up and will continue to go up in nominal terms if price continues to go down, or if you take profit and gain your unrealized P&L and turn that into realized P&L. So futures markets will often be used for hedging. And of course, they're also used for long-term speculation for those who want to avoid the funding fee. And again, this is typically for those who have done their research, going to be utilized by people going long, because funding on the XBT USD perpetual contract significantly favors short positions. In fact, back in the day, several years ago, BitMEX even advertised utilizing short selling on the perpetual swap contract as a way to earn passive income, because the funding rate is almost always negative. Now, of course, the funding rate does sometimes go positive, but if you do the statistics and if you average it out, you will see that almost always shorts get paid. Longs pay shorts. Or excuse me, because the funding rate is almost always positive, right? The funding rate is almost always a positive number, which means that longs pay shorts. Excuse me for my misspeak there. So being that is the case, XBT-USD does represent a good opportunity for individuals to short sell as a way to earn the funding rate as basically interest on their Bitcoin holdings, a way to accumulate more BTC. This works very well in a down market. It works very, very well in a sideways market, and it does actually work okay in a bull market, right? If you are similarly holding a long position simultaneously, or utilizing another platform like the futures contracts to similarly go long. So for example, you have $5,000 that you short on the perpetual contract, and if you have $5,000 that you go long on the futures contract, you are essentially stable, you are essentially hedged, flat, and simultaneously, you are also earning interest from the XBTUSD funding rate, perpetually drops in the bucket, and getting that realized P&L. And when you close all positions out, you'll have actually made profit in the form of passive interest from the funding rate. This is a pretty popular method that a lot of traders employ, actually. Now, of course, you can do the exact same thing on the platform I do prefer to trade on, which is Bybit. I'm not a big fan of BitMEX anymore, although I do still trade from time to time altcoin futures contracts on that platform when I want access to more margin, because it's more accessible as a platform. You can do the exact same thing on Bybit with the BTC USD perpetual contract. The only difference is they do not have the concurrent futures contract to also speculate on. So typically the reason for the price divergence from the perpetual contract to the futures contract is A, time to expiration. So there will be contango or backwardation, which means that price will either be trading at a premium or a discount to the real price of Bitcoin, more pronounced on the futures expiration contracts rather than the perpetual contract, because there is a lot of time left for that contract to expire. But as the contracts, very similar to options contracts, as you get closer to the expiration date, that backwardation or contango dissipates, right? So typically a good strategy as well, and I go over this, by the way, in the premium webinar section in the BitMEX 201 video, I cover contango and backwardation strategies for the BitMEX markets. When you see a market that is in strong contango, that represents an opportunity, just as when you see a market in strong backwardation, that represents an opportunity as well, because likely as the contract reaches expiration, that will become more nominal, that will become more close to the actual spot price of Bitcoin and be settled again according to the index price. So you can either close out early or simply wait for contract expiration to realize your unrealized P&L and have that become realized P&L. So typically the reason why the prices on the futures contracts are going to be higher is because, again, those markets are typically used to go long, and there is time to expiration. So there's a little divergence, right? So what that would indicate, being that the prices are similar now, is that not a lot of people are taking those long positions. So you don't, and of course the March contract should already be getting close to the actual price of the perpetual because the date of expiration is coming up at the end of the month. And the June contract, the farthest out contract, I believe what that is indicating is that individuals are dumping their long positions. They are selling. And so there is not that contango pressure to keep the premium on Bitcoin's price. So great question. Thank you so much. I hope that was helpful. This will be a Breaking Bitcoin Bits later. So drop a comment down below if you found this article helpful and what you'd like me to cover next. Let's see here. Next question. So this question is, Justin, what would you do if you panicked this morning and realized that you got liquidated under 6,000? What would I do? Would I re-enter now and accept the loss, or wait for a lower opportunity? So my general recommendation, so again, let me condense this into what I think is a better question. The question seems to be, Justin, what would you do if I just took a significant loss? Or Justin, what would you do if you just took a significant loss? Would you dive right back in, or would you wait for a lower opportunity? So here's the answer to that. Because the reality is that today is no different from any other day. And this loss, or that loss that you're referring to, is no different than any other loss. While you are still going through the process of becoming comfortable with your trading strategy, you are going to naturally feel pain when you take a loss. You are going to be seeing the number in your trading account diminish. This is why we advocate the process of backtesting, demo trading, paper trading, or live trading with small capital to help ease this stress, because you have time then to see your strategy play out in the live market with live market price data. And you understand that as with any trading strategy, there is upside and there is downside. And knowing that in the long run, you will come out ahead makes those periods of downside much more palatable because you will have to go through them. And this is how over time, over several years of trading, you develop that mental and emotional discipline that makes you a really tough competitor out there in the markets and then has you answering these questions. So the answer is, if we condense this into what the answer really is, what would you do if you just took a loss, right? Doesn't matter the size of the loss, although it of course can. What would I do if I took a small loss? What would I do if I took a medium-sized loss? What would I do if I took a big loss? Couple answers. One, practice proper risk management so that you know your max downside. Liquidation is not something that should be happening. Position sizing and proper leverage will alleviate that forever. So again, I never recommend that anybody uses more than 5x leverage. I always recommend that for every single trade, every single person uses a stop loss. And I advocate and recommend now actively that people who are in their first year, maybe even two of trading, do not hold their equity in BTC, that they hold it in USD or USDT if they are a trader. So that way you're holding your equity in a stable currency and you are able to see the results of your trading. As you become more advanced, if you would like to adopt a strategy similar to mine where you do hold your equity in BTC and then you use futures contracts to hedge your position, you can adopt that over time and backtest that as you would backtest anything else. So that's number one. That's the long-term solution that will make sure that every loss you ever take is not a large loss, a small loss, always a small loss, or an acceptable loss, 1 to 2% of your account maximum. Every single loss should only be 1 to 2% of your account. And 3 consecutive losses should have you taking a month off from the markets. That's the whale rule. That's the shark rule. From Dr. Alexander Elders, Come Into My Trading Room. Fantastic book. I highly recommend you read that. The second part of this question is, what would I do if I just take a loss? Would I dive right back in or would I wait for a lower opportunity? Well, the second option is the correct option. If you just took a large loss, then the correct thing to do is to take a few days to get your head right. Because the place where the question is coming from is clearly coming from a place of anxiety and stress. And I know what it feels like to see a large loss, to see a large deduction from your trading account. I've been there. I've been doing this for a long time. And the correct option is, of course, to take some time off, to get your head right, to reassert yourself, to reestablish exactly how you're going to trade, and then continue on as normal. Again, if you took a larger than 6% loss of your account, I would recommend that you take anywhere from 20 to 40 days off from the market. This will allow you to be reinvigorated. This will allow you to reestablish exactly what it is about trading, what your edge is. You don't have to not be practicing. You should be utilizing that time to backtest, refine your strategy, double test things, paper trade, but you should restrict yourself from putting actual capital into the markets, and you can move into USDT, you can hedge. But generally, I'm going to recommend that from the point of this question, I would recommend you move into USDT or USD. That way that you are truly risk out of the markets. You can really take some time to establish yourself and you just cut off the emotional circuit breaker that can cause this sort of distress. And then just reevaluate your strategy, reevaluate your position sizing strategy, your stop and target strategy, and then just proceed as normal once your kind of timeout period is over. These are just good mental and emotional and proper trading discipline rules and techniques that every trader implements into their lives when they want to make this a career or when they want to be successful at this. So if it was me and I took a very large loss today, I would take some time off from the markets. I would not dive right back in. I would reevaluate. I would double check my systems, double check my position sizing, double check my stop and target system, make sure that everything is correct in that, and then proceed as normal once my timeout period is over. Thank you so much for the question. And again, I do want to end that question on the note that every loss can hurt. And the reason we practice these strategies, the reason why we do everything consistently, the reason why we do the back testing that we do, the reason why we build the systems that we do, and the reason why we practice the risk management that we do is multifold. Reduce losses, make losses consistent when they happen, and make gains consistent and prioritize those over losers. Maximize the results of the gains, minimize the results of the losses, and then apply that model consistently over time so that we have a consistently profitable trading strategy. And I do truly believe that that is the only consistent approach to the markets. So thank you for the question, my friend. Don Candon, thank you so much for the 20 crones, my good friend. He says, thanks a lot for in-depth answers, plus bottom feeder for the win. Thank you so much, my brother. And Umaldo7, thank you so much for the follow over there on Twitch. Jürgen Ernst asks, I'm catching up on 1.25 speed, and I sound overall positive on the markets and/or coronavirus. What about the prospects of a real recession followed by the market breakdown? Historically, that's how they start. So let's look at what could happen. So what followed the 2008 financial crisis? And of course, I'm going to be speaking from the perspective of an American. So as somebody who lives in the heartland of America, as somebody who is not in the 1% of wealth in this country or globally, so as somebody who is and comes from lower income and has, through my own grit and entrepreneurship, found myself to be in a comfortable position in life. What happened to Main Street America? What happened to regular human people economically following the financial crisis? Well, first off, their 401ks and pensions were gutted. They were stolen. Your pensions are not there. They don't exist. The money is not there. Secondly, inflation kicked in. The price of goods and services went up, and purchasing power of the individual dollar went down, and that trend persisted for quite a while. Obviously, there was a lot of unemployment and layoffs, highest unemployment rate in recent history. Now, it's only over the last couple of years that regular Americans, that regular people have felt the impact of the bull market. Wall Street has been feeling the impact of the bull market for the last decade. But it wasn't until just the last couple of years that I noticed that other people were noticing the actual impact on their lives. More job opportunities, less unemployment, higher wages, higher salaries, lowered cost of goods and services, a good CPI. Of course, the CPI report came out yesterday, the Consumer Price Index, confirming this. So all of these things, the actual impact on your life of the economy being healthy. It was just over the last couple of years that regular Americans were beginning to feel this. And that is a very sensitive and fragile thing. And it won't take a lot for that to be destroyed. But we've got a few things here. If you ask, am I bullish on the markets? The answer is no. I'm bullish on my country. I'm bullish on the people of my country. And I think that there are some fundamental events coming up that lead to a nice rebound. Now, I am ambivalent. I am on the sidelines for a long-term prediction of we're going to have, I've already said we're going to have a 1 to 3 month bounce, probably coming up before the end of the month. That is going to start most likely in traditional markets by the end of the month, if not sometime in April. I've already said that. That is my prediction about traditional markets. I think that Bitcoin similarly will accumulate and follow along over, particularly pronounced movement moving into the halvening and over the next couple of years as the fallout from the market sell-off impacts the economy and the standard of the economy for the regular American begins to decline again as we were just recovering confidence. Now, do I feel that we're going to go into a global recession? I do not have the answer for that. Of course, that is a very broad term. A recession means different things for different people at different times. Overall, what does that mean? Could we see 3 to 5 years of austerity in places like the United States? Certainly we could. That's not necessarily correlated to markets. We can see, again, you can look at the rebound after the 2008 financial crisis, after the plunge of the markets, and then almost an instant rebound, right? The market was climbing up, soaring and breaking new all-time highs, the SPY, the S&P, valued in dollars, as regular Americans were still hurting. So you can have a good market in situations where regular Americans, regular folk, are still feeling pain from the economic fallout. Okay? So do I think that that can absolutely happen? Yes. I think that, Americans can and potentially should look for maybe some hard times ahead. Now, I don't know about that. I'm really not that sure, right? Again, we had just gotten back to a level of stability, and it's possible that we can just consolidate here, a little bit of fear, but overall that the standard of living for Americans can continue to move up, right? Or at least hold this level and continue to move up as far as feeling the feelings of prosperity and market opportunity. It depends on what happens. Now, with the Fed set to slash interest rates on the 17th and 18th by another 50 basis points, which I truly believe will happen, potentially another 75 basis points. Again, that is going to increase the circulating supply of money. They're going to begin quantitative easing, and this will have an impact on the economy. We will bounce back from this. But again, you will have a long-term fallout from that in the purchasing power of the dollar and the rise of goods in the rise of the price of goods and services. This is the narrative that can and will propel Bitcoin to appreciate in price, or other safe haven assets, gold, silver, other forms, commodities, things like this. So overall, what will the long-term impact be on the stock market? I don't know. I feel very confident that we will see a 1 to 3 month rebound. I'm ambivalent on whether we will enter into a recession. I need more data. And I'm also ambivalent about what the stock market will do long-term. I don't have those answers. What I do know is that despite all of this fear and panic, once this resides and once people stop freaking out about death and terror and panic from the coronavirus, because it will not have that impact mortality-wise. It just won't. We can begin to put the pieces back together, and we are strong. Fundamentally, human beings are strong and good people. We come together, we build societies, we innovate, we grow, and we make things better through technological solutions and through compassion. And I think that we have the strength and the discipline and the courage to do that again and again and again and again. And it doesn't really matter what the stock market does. So if you ask if I'm bullish on the markets, the answer is no. If you ask if I'm bullish on humanity, the answer is and will always be a resounding yes. I want to thank GBU Professor Wally. Thank you so much for the $20 donation, my friend. He says, now you know why I was shilling ProShares SH so hard the last 2 weeks. Me too, my friend. Safety tip, watch out for your make or die right now. I'd have to look more into that. Again, I'm not super into the DAI ecosystem. I've covered it a little bit. I've definitely educated myself a little bit more. But again, that is a leveraged situation. And I know that Ethereum holders are probably feeling the pain right now because DAI was essentially being used by a lot of people to leverage up on their Ethereum positions. I think they might have bought at some bad prices, though. But yes, by the way, overall, my position in the global markets is the same. I do remain a large amount of my stock portfolio is still hedged with ProShares. I've taken 50% profit on my SDS trade, which was speculative. I still have 50% open, and I will be exiting that at some point in the future. And then I will be using those funds to reallocate back into assets, real estate, stocks, and other opportunities that I may see fit. I'm already quite comfortable with my holdings of cryptocurrency, and I'm quite comfortable with my holdings of precious metals. Challenged investor, thank you so much for the $2, my friend. He asks, what happens when the Fed cuts another 75 to 125 basis points? Well, I don't think we're going to see 125 out of the gate. I certainly think that we'll see 50, maybe 75 come the Fed meeting on the 18th, 17th, and the 18th. So again, what will happen? Again, I want to point this out. I think that individuals will take advantage of that. I think that entrepreneurs like myself will take advantage of that. I think that they will take on debt to establish products and services that the market will buy. I think that businesses will take on debt to hire new employees and put together back the pieces. Again, it's not like we're in a terrible place and the bottom's falling out. Again, the market and the average American business life had largely recovered and was in a good place over the last couple of years. And now, once this once this fear over the coronavirus dissipates a little bit, so give us 6 months to a year, I think that people will realize that, oh, we're really not in that bad of a place. overall. And, oh, by the way, rates are really low and credit's cheap, right? So there are positive effects that we can see from this economically. Challenged investor, thank you also for the $2, my friend. He says, horrible mainstream media panic to denounce Trump. You know, I will say this, I do my best to stay unpolitical on this channel so that this channel will appeal to everyone. But yes, of course, the media, regardless of what side of the aisle that you're on, the media is so highly politicized right now. It is caustic and toxic. And I do not think that, honestly, either side of the aisle, but, you know, again, you know, blame can be levied anywhere you like. But, you know, any mainstream media right now, I do not think that it is good for America. I do not think that the narrative that I hear coming from Main Street, from mainstream television, from mainstream media is positive, helpful, hopeful, factual. I think that it's actually quite caustic, toxic, and carries a very implicit, like, we are against the country bias. And I do not understand that. I do understand it, but I don't think that it's healthy. And I do, again, as I've been advocating for years, suggest that people do not take your information from mainstream media. You can get the same data and facts right from the websites that they quote. If you want knowledge about the coronavirus, go to the CDC website or go look at what they're doing at the Imperial College London. Go look what they're doing in other places around the world. Go to Twitter, go to Reddit. You have to be a little discerning of your news, but it's the exact same place they're getting their information. There's no such thing as vetted news. It's vetted, ran through reviews, and then run through whatever political bias happens to be. So if you're watching Fox, it's going to run through a right-wing bias. MSNBC, CNN, C-SPAN, all that stuff, it's going to run through a left-wing bias. That's just typically how it works. And that's not healthy. It's not good. There's no objectivity from mainstream media anymore. And that's really what people want. And that's, you know, kind of the error that I try to bring to this show. You know, sometimes we fall off the rails a little bit, but we do our best to make the show palatable and enjoyable for everybody, regardless of where you come from, because my message and my belief is that though we disagree, we're all in this together. We still have to inhabit and share the same earth. So please, can we use philosophy and logic and compassion to somehow live on the same rock without bashing each other's skulls? And that would be great. So that's my goal. But yes, a lot of rhetoric, a lot of I can't say the word. Political rhetoric coming from the mainstream media that is not helpful to anybody. That's not helpful to anybody. All right, with that being said, I think that covers the majority of the questions today. Thank you guys so much. Hopefully the mic is not freaking out again. We had audio issues earlier and I reduced the CPU load. Again, we're doing kind of a lot right now. So let's just check back in with the markets. We are currently trading above $6,000. We are currently trading above $6,000 on Bitcoin. Make sure to, if you're just catching this now, make sure to rewind and catch the show a little bit earlier where we go really in depth on the crypto markets as well as the traditional markets as well. So Bitcoin at 61.22, Ethereum at 141, XRP at 16.75, EOS at 225, Litecoin at 35.83, Binance Coin at $12, and then we'll switch over to the SPY. And as we go into the afternoon, getting closer to the close of the daily, the SPY down at 253.32 and dipping. The Q's down at 181.35. The iShares Trust, the Dow down at 124.83. Gold dipping, silver dipping as well, and Bentley crude still looking negative for the day. So again, looks like we're going to have a very negative day. And again, overall, please, as we continue to move forward and proceed, we are coming into opportunities. However, if you took a large loss today, the best thing to do is, of course, sit on the sidelines for a little bit and wait for your next signal. You should have a strategy that you're building that gives you objective signals that you've back tested. And it doesn't matter what the market's doing. This is not the time to start switching your strategy around. This is not the time to start listening to headlines. This is not the time to start doubting yourself. This is the time to stomach whatever has happened and continue forward doing what you have trained yourself consistently and with discipline to do. There are black swan events. There are non-black swan events. They are rare. They happen, and we eat them and continue moving forward, regardless of what side of the market that you are on. It doesn't matter. Doesn't matter. It doesn't change anything. Market conditions are always in flux, but one thing remains the same, and that is how your strategy can consistently perform over time. So I want to thank everybody for joining me for today's episode of Breaking Bitcoin Market Analysis, Thursday Market Death Watch edition, coming to you live from the underground bunker here at the Kraken Cryptocurrency Studios. If you guys have any questions, comments, opinions, sarcastic remarks, and or death threats, please leave them in the comment section down below. And overall, please let me know what you guys learned today in today's video and what you guys would like to see in tomorrow's episode. We will be back tomorrow at 12 p.m. Central Time, 1 p.m. Eastern, as we are Monday through Friday every single day. Make sure to join us in the Discord. Link is in the description down below to stay up to date with everything that we do. You can, of course, follow us on Instagram and it's over here now. Instagram and Twitter for exclusive content. We post that multiple times a day. If you're watching on YouTube, make sure to drop a like on the video, subscribe to the channel, and turn on all notifications because we do post content here twice a day. So make sure to stay tuned for this evening's Breaking Bitcoin Bits, which should be coming out at 6 p.m. Central Time. And of course, if you guys are beginning your journey toward consistent profitability and you would like mentoring and experience on the road, make sure to check out what we do at premium.krakencryptocurrency.com. Links and other links are down in the description below. I hope that you guys have a fantastic day, and overall, take this with you. It always pays off to be bullish on humanity because that is a bet that pays off well in the long run, and so has Bitcoin. So with that being said, trade safely, and I will see you guys tomorrow. Look forward to seeing you guys in the Discord.